Ladies and gentlemen, welcome back to the channel. Rezolve AI at the time of recording this video is up 11%. It was up more than that. At one point, the stock hit a high of $7.58 per share. Currently, it's at $6.99 per share. And here in this video, we will be discussing all of the news that came out today for Rezolve, the price target increases, and what is coming ahead for the stock. I will also share with you what's happening in the broader markets today, because it does seem to be a bit of a risk-on day. The Russell 2000 is by far the leading index, and that should be discussed. Why? What's happening? So let me know your thoughts on that down below in the comment section. What are your thoughts on Rezolve? Let me know. Check out the link down below in the description of this video as well to come join the trading community. If you guys want to come invest in these small cap AI stocks with us before Wall Street ever, figures it out. We want to be first. We want to be correct, but we want to be first. And, that's how the money is made, in my opinion, in this AI revolution. You want to be early to high quality stocks. And that is what we strive to do. Check it out down below in the description of today's episode. But with that said, we have a lot of work to do in this video, so let's get started. So first and foremost, Rezolve AI, the company that puts out a lot of press releases, put out another one today that says Rezolve AI is pleased to announce that 6 leading equity research firms have raised price targets, citing Rezolve's execution, partnerships with Microsoft and Google, and accelerating revenue growth. We can see this article that goes over all of them. So some of these happened yesterday, like the Maxim Group that raised their price target to $15 per share, citing Microsoft and Google partnerships, the BrainPower scalability and payments expansion. Roth Capital raised their price target to $12.50 after independent diligence validated partnerships. BrainPower outperformed frontier LLMs. AGP and /Alliance Global raised their price target to $11 on accelerating conversational AI adoption and balance sheet strength. HC Wainwright price target raised to $10, citing repeatable M&A and successful Liverpool upsell. Cantor Fitzgerald price target raised to $7, highlighting ARR momentum, Asia expansion, and Brain Suite extension. And Northland raised their price target to $7, citing accelerated 2026 revenue outlook, unique ability to acquire at low valuations, and upsell AI offerings, and BrainPower's outperformance in commerce-specific benchmarks. It goes on to say, from Dan Wagner, quote, analysts are recognizing that what our customers already know. Our BrainPower models are setting new benchmarks for enterprise AI in retail, outperforming general purpose LLMs in empathy, contextual relevance, and accuracy, while our Brain Suite transforms engagement, boosts conversions, and unlocks new revenue streams. We're building the indispensable infrastructure for the age of agentic commerce. And obviously at this point, if you're watching this video, you know about the short reports that have came out about Rezolve before they reported earnings. We talked about this a lot on the channel, but Rezolve was really an easy target to be attacked by short seller firms, okay? Because Dan Wagner's prior company that went bankrupt in 2016, the fact that they're a UK-based company, so they only legally have to report on a, biannual basis, like they were an easy target to be attacked by short selling firms. Okay. We got it. But that was before earnings. Now they raised guidance to 150 million in ARR for this year and 500 million for next year. And specifically, the management says they put those targets in place to beat those targets. They don't want to meet those targets. They want to beat those targets. So really, the numbers are likely to come in much higher than even, the posted numbers, right? So all of the short report, all of the noise we've seen recently is just that. It has been noise. And there was a lot of people that got tricked out of their positions and now are like, well, crap. Maybe this company is legit. Maybe this company does have many years of hyper growth ahead of them. And now they are getting back in. Now, from a technical perspective in the stock, you're back to kind of a key level, right? As I said in the last video, if you get above $6.50, then things get exciting to the upside, right? And that's where we are today. And it's really not going to take a whole lot, in my view, to get a retest of the $8.45 level that we were just at recently. I think the earnings by far justify that. And you still have some maybe residual, bears out there that are still in the process of exiting positions. But especially the higher that we go, you start to clear out those bears that, sold for a loss, right? Like once we break $8.45, the bears are gone, right? Anyone that wanted to sell is gone. And that likely leaves a lot of room to the upside, okay? And, that's my thought process of how I'm thinking about Rezolve at this current moment. Now, I will share my position in this video, but look at the RSI. It's at 62. If we do go through a strong market over the next 3 months, like I think we will, October, November, December, what I've talked about for a while, the guidance is there. The numbers are there. Market sentiment is going to start reflecting that, in my view. Come on now, the stock is trading based on next year's ARR of $500 million at like 2 times price to sales. That is ridiculously cheap. Now, again, short report just came out a couple of days ago, so it's going to take a little while for people to get over that. But as we get over that, don't be surprised as the stock continues higher. And even then, you're likely to start getting more analyst coverage on the stock, right? I think that's fair to say. Like new analyst firms are going to come in and start putting out their thoughts, their targets on the company. And pretty much all of them have rated the stock as a strong buy at this point. I believe one has a hold on the stock, but it's from a long time ago, so they really need to update that price target. Now, I've speculated for a while now. I've just had the feeling that maybe NVIDIA takes a stake in the company like they have other peers in the AI, field, BBAI, SoundHound, right? If that happens, that's next level, okay? That's what really gets Rezolve on the main stage. Because even, again, with some of the recent rise in volume we've seen, you're only seeing like $200 to $300 million worth of volume on any given day. If you look at Tempest, or you look at Nebius, or you look at Applied Digital, or any of these other stocks that are in the retail AI space that are really dominated by retail investors like Rezolve at this point, you're seeing volume numbers in a dollar amount that are much higher than that, right? Much higher than Rezolve-like numbers. So it's just a matter of time before the stock gets the attention it deserves and more people learn about Rezolve. Rezolve is still a widely unknown about stock at this point. Like most people don't know about Rezolve, even retail investors. So I think there's a long way to go before Rezolve is like a BBAI, if you will, where everyone knows about the company. Because if everyone knew about the company, with the guidance numbers we got, the stock would probably be $10, $15, $20 per share right now. Okay, so that's how I'm kind of thinking about this at this point. Option activity expiring today. The volume on the call side is 85.5% calls. Volume on the put side is 14.5% puts. For next week, open interest is 84.32% calls, 15.68% puts. Volume is about 81% to the call side, 19.3% to the put side. October 17th, similar numbers. Open interest, 84% calls, 16% puts. Volume today, 81% calls and about 19% puts. So very much, bullish activity in the options market today for Rezolve. And I expect that will continue. Short interest of free float at 8.5%, $85.5 million sold short in Rezolve. 13.62 million shares sold short as well. Utilization at 100%, which utilization is basically a metric of how many shares are utilized out there, right? How many shares are just freely trading out there? How easy is it to get your hands on shares in the company? The higher the utilization, the harder it is to get your hands on shares. So what happens on, the next influx of buying pressure where the stock has a really big day? You're not going to have that many shares available. So if short sellers need to try to cover, that becomes a big issue. There's 13.62 million shares sold short. Volume on the stock really varies. Before the last 3 days, volume was anywhere between 20 and 40 million on a really high day. So 13 million shares sold short is quite a bit. If you need to see, a couple million shares cover in a day or something, that's gonna drive up the stock a lot. And I think, again, it's really only a matter of time before even the shorts here get squeezed. Because if you have not heard this breakdown before, let me give it to you. Retail owned about 40% of shares. Institutions owned roughly, or insiders owned roughly 38% of shares. Private companies owned about 14% of shares. Institutions owned about 10% of shares. That is a large chunk of the float that is not trading hands right now. That is pretty much bought and held. Okay? Although those numbers have definitely moved around a little bit, they're likely still similar to that. So, there's not a lot of shares trading. And that's why I think we see a lot of volatility in the stock in both directions. Now, here's my position in this portfolio. I have about $84,000 invested in the stock. Unrealized return up 48,200, or up 135.3%. Average cost basis $2.97 per share. Invested for 105 days. Right before earnings, I did buy 2,000 shares, 1,000 shares in this portfolio and 1,000 shares in another portfolio. But again, current quantity is 12,000 shares. In this portfolio, I have $97,671 worth. Unrealized return, or total return so far, $56,149, up 135%. Average cost $2.96. 14,000 shares currently. I do still own these Rezolve 250 calls for February 20th, 15 of them, with a current market value of about $6,900 and a total return so far of $5,325. I don't know when I'm going to sell these, but I'm going to sell the options before I sell the stock. I just don't know when. So that's, to be continued. But that's the first thing I'll get rid of, just because of the time. If this stock continues to work and I continue to like what management is saying, I might just hold the stock for a year so I don't have to pay short-term capital gains and can pay long-term capital gains. Or if the stock goes to, 20, 30, 40, 50 bucks next year, like I think it can, then selling options, selling calls against my position might be the best strategy as well. So I really don't have a game plan here. I just think the stock is still significantly undervalued, underappreciated for the kind of numbers that we just got. And I think there's dramatic upside from here. But the question is, when does that happen? That's really an open-ended question. Let me know your targets for the stock by the end of the year and for next year, if, of course, you are still invested and a believer in the company. But with that said, remember, just because I am not selling my position does not mean you shouldn't, okay? If you want to sell, take profits, buy more, do what you guys want to do, okay? I'm not a financial advisor. I am not a financial planner, okay? Like, if you have a lot of profits and you want to make it free, sell half of your position or whatever, that's never a bad idea, right? You take your money off, you play with the house's money, by all means. do what you guys want to do. I just, again, want to stay allocated heavily to this company because I think there is significant upside ahead. But that's just my view. So let me know what you guys are doing down below in the comment section. Now, if you guys did not see this yesterday, it's worth pointing out. Tom Lee sees the S&P 500 topping 7,000 by year end, says don't be fooled by shutdown calamity talk. So, you know, some of your biggest bulls are still holding with that bullish view. Now, the Russell 2000 today is up 1.5%, by far the leading index. NASDAQ up 0.3%. S&P 500 is up 0.51%. The Dow is up 1.08%. The Russell is down 2.2% today, or the VIX down 2.2% today. So you're definitely seeing a bit of a risk on appetite out there because, I mean, we did not get the jobs report today. That was really up to Trump whether or not he still wanted the BLS to release the jobs report, and we didn't get it. So, you know, it's going to be delayed. Now, we did get the ISM services PMIs. We were expecting a number of about 51.7. We came in at 50. Business activity came in at 49.9. We were expecting 51.8. Employment came in at 47.2. We were expecting 46.6. New orders came in at 50.4. We were expecting 55. And ISM services prices came in at 69.4. We were expecting 68.9. So some areas came in weaker, some areas came in a little bit stronger, but, you know, just not getting the jobs report today, I mean, it seems like it was a positive for stocks. Now, also in the news today, OPEC Plus is set for another oil output hike on Sunday, but the size is still unclear according to sources. Now, China pushes Trump to remove curbs as it dangles investment. So, China might invest in the U.S. That would be definitely a step in the right direction from a geopolitical perspective. It says here, the freight recession shows no end in sight. The trucking and freight industry has been in a prolonged downturn for 3 years with little sign of recovery, says Stifel analyst. Weak consumer spending, housing, and industrial activity continue to suppress demand. Carriers and shippers report slow business amid trade tensions, high interest rates, and recession fears. Analysts see few near-term signs of relief. House Speaker Johnson says we can't extend Obamacare subsidies until the shutdown ends. And Johnson says that Trump may have a chance to eliminate wasteful programs. Trump says for Hamas, however, they will be given one last chance. Trump says this deal also spares the lives of all remaining Hamas fighters. Goldman's Solomon warns of a market pullback. Goldman Sachs CEO David Solomon says he expects a stock market drawdown within the next year or two, noting the current rally isn't surprising given past cycles. He compared today's tech boom to the internet era, where many firms disappeared, but big winners like Amazon emerged. There will be winners and losers. Fed Moran says, I don't think my position on rates is extreme, just want to get to neutral faster. Fed Moran says dots for 2026 and 2027 are not that different from the rest of the FOMC. Fed Moran says negative tariff impacts fall on foreigners. He says, I'm not seeing a broad-based inflation increase on tariffs. Fed Moran says, I don't think the neutral rate is zero. Fed Moran says access to data is important to making policy. Fed Moran says hopeful Fed will have needed data by the next FOMC. But again, I think some of the positive from a market's perspective is if we don't have that economic data, like it raises the odds that the Fed is going to cut, because the risk is that the labor market is weakening right now and we can't see it. And then next thing you know, we start to get data coming in that shows the Fed is way behind the curve, right? That's kind of the problem. That, you know, reason why the Fed would insist on cutting rates preemptively, even if they didn't have the economic data. But with that said, let me know your thoughts on Rezolve and the broader markets in the comment section of today's episode. If you guys want to come join the trading community, check that link out down below in the description of this video as well. Have a great rest of your day, and I will see you in the next one.